A space that was in focus this week was the auto sector. We had two numbers that came out, Bajaj Auto and TVS Motor from the two-wheelers. It was very interesting. It was a tale of two cities actually. By the end, Bajaj was up and TVS was down. So we decided to do a bit of a comparison of both. And Rahul, I wanted your view on them as well. Let's explore how the two results compare to each other, right? Let's begin with the margins. Now, Bajaj Auto's margins scored over TVS Motor because they did better than expected, and they did well despite the, the adverse product performance. So if you look at it, the product mix, right, they had lower contribution from three-wheelers, and despite that, Bajaj Auto managed to come out with margins at 20.1%, while TVS Motor margins were at about 11.2%. Elara Securities put out a note where they said that margin resilience is impressive for Bajaj Auto despite the adverse product mix. The three-wheeler contribution was down 300 basis points quarter on quarter. This implies that Bajaj Auto's margin performance is not overtly dependent on the three-wheeler performance. Let's look at the net realizations as well. Bajaj Auto once again scores over TVS Motor in that front. The net realizations for Bajaj Auto went up 6.5% year on year, while TVS Motor's net realizations barely went up about 0.6%. Now, I think the biggest brownie points for Bajaj Auto is on valuations because it's much cheaper than TVS Motor at this point in time. So Bajaj Auto is now trading at 20 times forward FY26 compared to TVS Motor, which is trading at 27 times FY26. So clearly it wins the valuation game argument for sure, but it also scores in other places like margins, operating performance, etc. Do you think as an investor you're better placed to pick Bajaj over TVS? What's your view? Thank you for watching CNBC TV18. For all the latest news and updates, do follow us on our social media platforms.